Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having a fantastic day. We're going to take a look here at Terra Classic, kind of see what's going on. And obviously, if you're new to the channel, I am not a financial advisor. I truly just love teaching people to trade. And pretty much anytime I make one of these videos, it's just the whole purpose is to help you understand best practice, big picture, and just to try to be able to navigate these environments, right? Lunc Classic, Terra Classic, whatever you want to call it, is definitely a unique coin, for lack of a better term. So do your own fundamental analysis on this. This is a coin I prefer not to trade personally, but I just, I have specific coins I like to trade. Definitely not the case as far as, this being just say, I wouldn't say it's negative, it's just extreme volatility and it's performing very well, but also slightly erratic, okay? And I'll explain more about that when I go through this here. So if you're new to the channel, again, not a financial advisor, if you want to become a better trader, CryptoCache.tech is the website, link in the description below, and I'll be happy to work with you there. I do offer discounts for third world countries and military as well, so feel free to message me if you have any questions. All right, so here's where we're at on the daily. Obviously, we're well above 70 on the RSI. Oftentimes when this happens, it takes a while for the price action to come back down. So we can kind of see how the price was retesting this level multiple times. Okay, it retested that for, 3 or 4 or 5, almost 6 days in a row, and then it continued to break to the upside. So that's very standard, very normal for any type of resistance, but you got to understand that 70 on the RSI is typically a key level resistance. Now that it's broken cleanly above, it'll work likely as a support, whereas the price might come down and bounce off of 70 on the RSI. It could put us in a position where it might kind of do something like this, right? So again, it'll probably pull back within reason, but I wouldn't expect it to be like a violent pullback. If it were to, just say worst case scenario, 1633 should, or sorry, 16,300 is effectively the next key level support. Because the reason why, of course, in case you don't already know this, is the previous resistance level, kind of telling us that that is essentially, the price is unwilling to go past that point, okay? So now that it has, it's going to work as a support level moving forward. Now, as far as Fibonacci retracement is concerned, we can kind of see that better case scenario right now is 24,000 on this continued trend. I think when I looked at it yesterday, it was 20,000 based on the previous Fibonacci retracement levels. But you want to update your Fibonacci retracement levels to the previous day's close. So we updated it yesterday to that previous close. Also, it's basically, for lack of better terms, it's all-time high if you don't consider the candle wicks in the first few days. So all in all, pretty good stuff there, 1633, or sorry, I keep saying that, 16,300 is effectively a key level support now. All right, so we got to recognize that's probably going to work as a support. But bottom line here is that we are fairly overextended at this point, so keep in mind it could continue higher, but if we see a third candlestick tomorrow, I would grow cautious because of the fact that three is considered three white soldiers. they are green though, of course. That's kind of a trading pattern essentially for candlesticks. So it's a candlestick pattern. When you see 3 green candlesticks in a row, the 4th day is typically red. And if you take a look at this here, you can see these are pretty obvious. We had 3 white soldiers here previously, 1, 2, and 3. 3 very strong green candles followed by a 4th red. The inverse also applies to the downside. It's three white crows, or 3 black crows, I think it is. And that is essentially a reversal there to the downside. Overextension is something you definitely want to take into consideration when it comes to trading just pretty much any and all coins. There's almost always a system in place. So taking a look at overextension here, we can see we're very overextended. So this extra leg up here in the most recent hour is, I wouldn't say unwarranted. It makes sense that it continued to test that resistance level for 5 or 6 hours in a row, but we hit a 9 here and didn't get a full-on reset, so it didn't get a chance to consolidate as long as it should before it legged up. All right, really just tells us it's still slightly overextended and a pullback might be slightly higher, at least a higher likelihood. But again, now that we've broken through that resistance level pretty soundly, 16.3 is effectively the key level support. So just driving that home, 16.3 is kind of where our support level lies. We could also have a secondary support here at about 18.5. That is a key level Fibonacci retracement line. Okay, so that could be where the price action kind of continues to consolidate before it legs up again. It doesn't look like it wants to slow down anytime soon, though. It's definitely got a lot of momentum, and until it breaks that ascending trend, so to speak, we got to expect it's going to continue. And speaking of ascending trend, you can see the 20-day SMA on the 4-hour is working concurrent, and the 50 is trying to catch right back up with the price action here, kind of just reaffirming that we're on the right side of the tracks. Not saying you want to necessarily take a long position, but you should, kind of consider. Well, to me, again, and this is different for everyone, right? I prefer to take profits while I still can. Okay, so in this case, with it being overextended and the potential is there for a pullback, take some profits perhaps. Again, depends on your overall scenario. I think somebody in the comments yesterday was like, it's stupid to take profits until it hits 1 cent. Well, that's not necessarily the case, because obviously that 1 cent could never happen, perhaps also. But more importantly, it's one of those things where you just kind of gotta evaluate it depending on your overall goals, right? If this is a HODL portfolio for you and this is your long-term investment, different story. You don't take profits, right? But if you're day trading or swing trading, you absolutely want to consider doing so. All right. So, anyways, we've established this overextended 4 hours. Well overextended on the RSI too. And just if you take a look at its history, right, just keep in mind when it comes up over 70 in the RSI, specifically in the 4 hour, a pullback is likely. All right. So again, we saw a pullback there, up over 70 here, pullback there. Okay. So hypothetically, the price should pull back at least to 18.5, right? Potentially even further, just because this is a dramatic increase, a pretty significant one. I mean, how much percentage is that? It's almost 20% in less than an hour. There is a possibility we're going to see a pullback to 16.3. I think 18.5 seems to make more sense for the circumstances, considering how much momentum it has. But generally speaking, again, it's overextended to the upside, and it hasn't had a lot of time to recover and kind of relax. And without consolidation, you can see some eventual, downtrend. Okay, so, I would say if this were to continue to increase as it is, we probably have another 24 hours before it decides it wants to pull back. Again, those 3 white soldiers is a pretty common, trading candle pattern, and I would say that could happen soon. For now, I would maybe just consider, depending on your overall position, taking a little bit of profits, but also holding on, because it doesn't look like it wants to slow down anytime soon. So this is a 1 hour candle here. This is that candle I was talking about, 20% in 1 hour, and it's corrected itself by about 5 to 6%, still trying to go up higher. Now, what we want to look at here is overextension as well. That we are in the 9th hour essentially. So even though we got some, not enough consolidation here at this point on the 4 hour, on the 1 hour, we did get a few resets. We came up to a 9, price comes back down. Came up to a 6, came back down, and now we're up to a 9 again. So when you see a couple of 9s in a row, it starts increasing the odds of the pullback, okay? So again, just saying statistically here, we have a higher chance of the price pulling back than it would continuing further, right? But based on Terra Luna's classic, whatever the hell you want to call it, based on its behavior recently, it doesn't look like it wants to slow down, and this probably doesn't even matter much. All right, this is probably just another leg up, and it's going to continue to leg up until it wants to stop. My speculation is that we'll see another 24 hours of bullish behavior, and then tomorrow, perhaps when that fourth candlestick occurs after the 3 white soldiers, then we should see a correction, and it may not be massively large. It's probably just going to be a traditional one, but on the same accord, it's something to kind of pay attention to and recognize. That being said, that's kind of where we're at here so far. The last thing to look at, which is kind of null and void, is the cloud. We're still up above. There's no reason to want to consider closing your position. I believe yesterday when we were getting close, it was getting close to that level, but it was giving us the indication it wanted to break to the upside too with this ascending type of pattern. So now that it's broken, keep in mind, we could see a pullback, but I don't think 16.3 is in the cards. I think 18.5 is probably more of a likely area, and that might be a decent area to consider adding to your position before it legs up again. Again, depends on your overall goals, right? To me, I prefer to avoid coins like this just based on its extreme volatility. Bitcoin's volatility is enough for me, but everyone has different strategies, all right? So again, assess your overall trading technique and make sure you adjust that accordingly. Try not to just jump between day trading, swing trading, and HODL trading, and then making a day trade a swing trade and making a swing trade a HODL trade. It's typically never works out favorably for you. At least in cryptocurrency, it's a lot more challenging to recover your costs or your losses, so to speak. Anyways, that's kind of where we're at there. So again, I would speculate, just to summarize here, we're going to see one more green candle tomorrow. Let's see if I can get a straight line in here. Almost there. All right, so a third green candle, right, to fulfill our 3 white soldiers, and then we can expect potential pullback on the 4th day. All right, that's basically what I'm expecting here. We'll see what happens, of course, but all things healthy here for Luna Classic. Even though it's overextended, it still looks very good. It's weird to say, at least in this market. Take a look at the traditional markets. Everything is kind of not doing so well. Bitcoin, it can't even break 20,000, and yet Terra Classic is kicking some ass. So kind of cool to see for a nice change of pace there, All right, that being said, thank you so much for joining me. If you want to become a better trader, again, CryptoCache.tech is the website. Link in the description below. Hope you have a great rest of your day. Thanks for your time.